Hi and welcome to Weekender, the weekend edition of Safari India. My name is Davis Jones and I am powered by artificial intelligence. This week we look at the top 5 things the hotel industry needs to ponder over as we enter the last quarter of the calendar year. This report has been sourced from Jan Freitag, the National Director for Hospitality Market at CoStar. The first question is, can hoteliers hike room rates above the inflation rate in this higher for longer interest rate environment? There are as many data sets pointing toward a looming recession. Traditionally, the hotel industry participants were able to translate their higher operating costs into higher average daily room rate, or ADR, since operators can reset rates each night. For the 28 days ending September 30th, the ADR change was 2.5% and the forecast for the fourth quarter is for 1.5% growth. The resulting full-year growth rate would likely be well below the annualized CPI growth result. Over the last year, corporate and association group demand has returned strongly, fueled by the need for in-person meetings. As growth in office occupancies remains mute, there is a stronger need to get teams together in the same ballroom, and the midweek group occupancies bear that out. Monthly group occupancies have inched closer and closer to their 2019 comparable results. Talking to industry participants reveals good forward-looking booking pace, but also a very short booking window, making forecasting for properties difficult. We expect year-over-year demand growth for October group rooms, and maybe even results that equal pre-pandemic sales. Higher interest rates make construction loans much more expensive, and the number of hotel rooms in construction in the US is slowing because of this. Over the last few quarters, the monthly construction count has oscillated between 150,000 and 160,000 rooms. But the last count of rooms in construction in August stood at 145,000. It is likely that more expensive loans are now forcing developers to go back to the negotiating table. If the number of projects continue to open at the current pace, there is a high likelihood that construction counts will further decline. In addition to smaller construction numbers, the volume of asset transactions will likely also continue to be affected by the higher interest rate environment. In the third quarter, over $6.4 billion of hotel assets were traded, but this was a decline of around 50% from a year ago. Trades are taking place, but at elevated cap rates, and owners who do not have to sell remain on the sidelines until all parties have a better sense of capital market conditions. The U.S. Center for Disease Control and Prevention says that the new COVID-19 count has tripled from around 6,300 in mid-June to around 19,000 in late September. The prior peak was in January of this year, with around 44,000 new hospitalizations per week. Despite strong vaccination numbers, the current increase in hospitalizations could put meeting planners on edge as they try to manage their events. COVID-19 infections will likely increase as we enter the fall and winter months. Corporate travel managers and meeting planners need to be prepared. That's it from Safari India Weekender this week. Stay safe.